Hello, and welcome to Markets in Focus. My name is Joe Bell, and today I'm going to walk you through some of the most interesting financial market themes that I'm observing. So the economy is yet to be showing too many signs of a near-term economic slowdown, with housing starts surging in May despite higher mortgage rates. Job market, really the part of the economy you want to pay attention to if you're looking to see when the Fed cycle is going to finally end. Remain flat for this month, still risen during the past 12 months. We'll talk about the implications of that for the Fed policy. And finally, Fed expectations. A lot of participants very surprised by the language out of the most recent Fed meeting. They paused, but expectations for rates not cutting, but actually increasing during 2023 actually increased after that meeting. So U.S. jobless claims came out for the month of May, or I'm sorry, for this most recent week at 264,000 after the upwardly revised weekly claim from last week. That puts it at flat for the week, but you can see over the past 12 months or so, it's continued to increase. This is the area to keep your eye on, not only job openings, but initial jobless claims, the leading indicator, if you will, for the slowdown in the U.S. economy that would eventually cause the Fed to actually cut rates. Housing market, incredibly strong. Mortgage rates are high, very high. Supply is pretty low, but you're seeing housing starts come back. U.S. housing starts up 21.7% during the month of May. Building permits also rising 5.2% despite mortgage rates around 7%. Obviously, the Fed funds rate at its highest level since 2007. Housing market strength remains strong. Part of the reason why the Fed still believes there's room for potentially higher interest rates. Now, if you've been paying attention to the past 6 months, this is a reverse course here, especially after the banking issues back in March. Take a look on the chart, the fluorescent green there as of April 30th. This is the Fed fund futures curve. Basically, the market's expectations for the Fed funds rate through all the meetings through December of this year. You can see something happened from April to June 14th. That curve came up. What's that mean? It means the market went from expecting the Fed to cut rates to now expecting that the Fed is going to pause. The Fed comes out and says, we expect the Fed funds rate to be around 5.6%. That's the median expectation based on a vote from committee members. With the Fed funds rate between 5 and 5.25% right now, that means the median expects at least one rate hike, potentially two rate hikes before the end of the year. Market's still digesting what exactly this forecast means, but we're seeing the odds of a potential rate hike in July actually back on the table. And finally, an absolutely incredible video, pretty scary video, actually. You can go on YouTube and watch this. This is a snapshot of it. A tow truck in Georgia trying to tow some vehicles off of a highway because of a car accident. Here comes a 21-year-old woman driving the car, must not have been paying attention, drove up the ramp of the tow truck. Car soared 120 feet down the highway, eventually crashed. Unfortunately, she's obviously in serious condition, but perhaps we'll hope she's all right. But very, very scary, absolutely incredible video. They've got that online. That's quite a scary ride for that woman. With that, I want to thank everyone for watching, and I'll see you next time.